There we go. All right, let's see. All right, can everyone hear me now? My good. Appreciate it. Okay. Anyways, I don't really, honestly, I don't care whether or not. Sorry. I don't really care if there's. Um, if, hello, hello. All right. Um, looks like it's cutting in and out. Let's see. About right there. All right. So, yeah, I see the problem now. My Bluetooth was trying to connect. Anyways, on a daily time frame, you will see that this. Sorry, guys. I have my headphones in too. It's just trying to connect to multiple things. Um, we have ES did not take this slow. We have NQ that did. So we'll go back in here just to look at some stuff. Go all the way back. So it's fine. We're at the open right now. There's not going to be a whole lot of volatility considering the we obviously see these equal lows too, but in here, what I'm looking for is still a run up into here. I don't really care what it does in between now and then because this still exists. So this is going to exist for quite some time. Um, this SMT because if you look here, it can exist all the way up into here. It doesn't have to actually go and take out this low. If it does, it's you're looking at this high to this low. You got these highs take or these lows taken. You have these highs taken. Now it's retracing back into here. So let it do whatever it wants at open. This is what I was looking for ahead of time. Guys, look, if you don't get that run at 8:30 like this, if you don't get that run at 8:30 and then you have the manipulation macro, I'm not trading that. Okay? So I want to see it run here and if it wants to continue at open, Going in and out again. What about now? No sound again. I want to make sure that the sound works. I'm not sure. I'll have to fix that. Sorry, I just had to I just updated my computer. I don't know if that has anything to do with it. Surely not. I mean, I'm using OBS. Um, Nonetheless, guys, what if you don't get a run at 8:30? Because typically, what happens at 8:30 is if you get that run and we go for the objective, it doesn't. Um, what am I trying to say? So before I cut out, I don't know if I said that part or not. Anyways, if you don't get the run at 8:30, you're not trading. You're literally waiting for open. ICT has talked about that. But if you get the run and you anticipate the run where you get some, you know, energy displacement, for example, then you can trade it, right? Now I took a partial here. I always take partials ahead of here because it really I prefer this to run before the macro and then the macro opens and then we go. But um, there was no SMT or anything like that. But still, point being is if I see a run at 8:30, I'll typically take the trade. And then, of course, when close above a short term high, I go to break even. So that's what I did. Anyways, obviously, we see these relative equal lows, right? And you have the open. It's not really that crazy volatile. I mean, yeah, it's about 40 points, but it's nothing too crazy. When you see all of this right here, this liquidity will be attacked. Okay? Most people see this as bearish. Yes, they do. That's retail mindset. And that's fine. If you ideally what I would want to do is wait. Yeah, these equal lows as well. Um, But smart money is going to accumulate under sell stops. So it's always the case. They're always going to accumulate under sell stops. SMT still exists here, and it can go all the way as far as here. It can go down an additional 20 points and still exist. So if I want a run to occur, and I still would want these highs, but you have to move your stop to break even, take the loss, and then the open happens. You let it do whatever it wants to do, and then you're just waiting. That's it. You know relative to here and here, you are in a discount. So you don't want to short here, even if it still keeps going. That's fine. Let it do what it wants to do. It just let it run. Because on a higher time frame, from this high to this high, we'll just use them as an example. You have this in here. So obviously important to be mindful of. It is a holiday. Logic still applies for me. I don't care. I love, still tape reading on a holiday. I think you build some endurance and durability during those times. So that's just me. I'd watch Price 24/7. I watched Price in Asia. I traded Asia session last night and did damn good. I knew it was going to be extremely. I knew we were going to have some price swings in there, so I wanted to trade ahead of today's open. Um, what questions do you guys have? You guys have any questions? It's been a weekend, so I'm just here to kind of chit chat a little bit. I haven't been on in about a week or so. Had some time today. Is extremely busy last week, and if you As far as last week goes, I will say that it was difficult. Okay, that's why ICT doesn't typically trade January. I talked to this with the people I work with privately. Last week was hard. Was it you had to take low hanging fruit objectives? It wasn't so much about trying to get to the end goal. That's also important to understand. Let's see here. But ultimately, yeah, like I said, once you understand, there's about 20 people in here, and I appreciate you guys if you like the video. Um, Encourages me to do this a little more. Uh, but yeah, ultimately, what we're identifying, what you want to wait for, is obviously a key time. 9:30 is a key time. Things happen at 9:30 as a key time. These are suspect. They engineer some more liquidity here. Stop just short of it. Suspect highs. Um, every equal high you should study. It's 8:41 right now. So you know that you have a macro coming up. Yes, would we all agree that there's a macro coming up? So my question is about the relationship time. Can you expand on that a bit? Specifically, how the time frames relate. Again, appreciate everything you put up. Um, Jonathan, in relation to the time frame, so the algorithm doesn't know what time frame you're on. I think I made a video on it. It doesn't. It a lot of people are like, oh, the 15-minute time frame's the best. The 5 minutes the best. The 1 minute. I don't operate off of anything other than a 1 minute because that's where the engineering, that's where the details matter. That's where you can identify can you swing trade off of higher time frames? Yes. Ultimately, it's fractal delivery in a sense. So it's it's all the same as far as whether you're this. Look at this. I'll show you. This is a one. This is a 1 day time frame, right? This happening right here, and I'll actually find a better example. Here it is. This right here. This, for example, is the same as this. It's the same. 1 minute time frame and a 1 day time frame. It's the same. What all that's happening is the larger the time frame you're on, the longer it takes to pan out. You see how fast this panned out? This panned out in 40 minutes here. This is 40 minutes. This is probably 40 plus days. You see that? So the only difference is the concepts all apply, but this is nothing more than this right here. Whether it's a, and you can see it. They'll create some equal highs. They'll do it along the way. Same thing here. Equal highs, trade down lower, then go higher, expansion, and then you get a big expansion move. Get a big expansion move. So, do the time frames have anything to do with relate to liquidity? Well, if I have, I mean, there's just so much liquidity on your chart. There's equal highs here, equal highs here, equal highs in here. There's ultimately a lot of things, and when you just tie them back in together, you get a 15-minute SIBI or a 5 minute SIBI. So these things happen. Whoops. But the algorithm doesn't really know what time frame you're on. It's operate because it operates from a smaller like the second chart. That's where it's operating off of. You can watch a 1 second chart form this low or that low, or you can see it's going to form that high or that high. So it starts all on the lower time frame. So but see, this is a good example. Hang on. Kind of based off what you said to inefficiencies. This 15-minute SIBI has not been traded into. So it is a inefficiency. And guys, hang on real quick. I got to take this phone call. Well, never mind. Um, Thought I did. But anyways, see, it's still 9:45. Nothing. Ask yourself this: if you're identifying a trade, where has a fair value gap formed to the upside? It hasn't. It hasn't formed yet. So why would you be looking for a trade? You're trying to time the bottom. You, it's the only way you're ever going to time a turtle soup or anything of that nature is if there were liquidity here to the left, and you know you're in a key time, and you know it's sweeping that low, for example, and then going higher. That's the only time you can technically time a trade. Where are you going to want to turtle soup things at? Well, ideally, you want to turtle soup. You don't want, in a downtrending market, you don't want to try to time the bottom. You would rather, time the top. I guess that's the right way to say it. I don't know how to really explain it other than if I'm bullish, I would try to sweep a low and then go higher. That's what I would look for. If I'm bearish, I'm not trying to sweep a low because it can keep going. So ideally, you have to wait. Um, Still waiting. None of these are significant enough to be a first fair value gap that ICT talks about. So see that? Look what we're coming up into. The macro. This is where it can get energetic, okay? This can still close in here. It's not a fair value gap yet. You don't want to jump the gun, okay? Now remember, if you were on the last stream with me, you get these fall. You typically open up, and then you may open up in a range, and nothing occurs until you expand out of a range, for example. So ideally, you're still waiting. Is there anything? I go back here. So there's that. Okay. So I want to go over here and see what has occurred. Because what lows did we take out here? Did we take out a 15-minute low? Did we take out that low? No. So actually, we may have. Where's this at? Yeah. So see, we stopped short of that low. It's also important to note. Okay, so I keep that in mind. It's nothing more than okay. So does it have to go there? No, not necessarily. It does not. I would see fair value gap forming in here. What that does. There is, how big is that? So 247 to 252. That you can put on your chart. That could technically be your first presentation. Now, what could happen? Um, does it have to? You're in a discount relative to here. So, am I trying to short? No, I'm not trying to short this. And I know these highs still are present. So, am I trying to short this? No, I'm not. I know they're going to engineer liquidity in a discount. This happens all the time. Watching here, it can leave this as a breakaway. It all depends on the chain of events. So you have that candle close there. Now you want to identify this. Does that become potential immediate rebalance? You just have to be patient. That's all. And that SMT still exists as well. So you get the gist, right? Let's see here. We have these ran. So I'd watch that fair value gap. Assume that may be a breakaway. And then you have these suspect highs. But you see how you get energy in here, you get this sloppiness, and then you get some energetic to the upside, right? Does everyone understand why you don't short down here though? Even if it runs down here, which we'll identify if that occurs. Even if it runs back down here to get these lows, this is a fake move, goes below the first presentation, then comes back above it. It'll be the same concept as last time because see that's very suspicious to me. But you have that daily SMT, so that doesn't necessarily mean that it has to go there, and you know that liquidity is going to be engineered in that aspect, or it could be. So now you're at a key time, you get all this down move, you still have these suspect highs, you have a 15-minute inefficiency, and from there you're simply waiting. That's it. And then you have this as the first presentation. Does it act as a breakaway? Do we get a trade back into here on ES, and then does it move higher? So if I get that here, I would look for that to go higher before or NQ wants to drop any lower. So it's all about the chain of events. There's a chain of events that occur. But do you understand the patience part of it? You have to be patient. You don't care. Do you ever watch? No, I don't watch it. YM. I only watch NQ and ES. I mean, you could add the Six Sister. You can watch those, but no, I don't. I don't typically watch any of those other than NQ and S&P because you don't technically. A lot of people think they need. Um, I'm not. SMT is very important. Don't get me wrong, but at the same time, it's ultimately not about an SMT because if they both perform the same thing at the same time, you're not ideally anticipating an SMT. So if they perform the same functions, you don't need an SMT. They're just in tandem at that point. All SMT technically does is tell you what's the weaker one, what's the stronger one. So NQ taking out the low and ES not is a sign. So, but as you can tell, this this move up is occurring, and smart money accumulates under sell stops. You get the buyers breakout or the sellers breakout. Sellers sell short in here. Retail sell short. They go lower. Right. So and there's still nothing really here yet. Still waiting. I'm not saying there's nothing here. You can get this run. I'm looking for. Uh, what's happening is what's supposed to happen. I mean, there's no ifs, ands, or buts about it. Suspect. They run it, so be it. You just let it run. It's not about. It's not about. What am I trying to say here? Uh, you need to understand the basics. It's about the basics. If you don't understand the basics, if you don't understand the bare minimum of smart money accumulates under sell stops to go to the buy stops, and they also accumulate above buy stops to go to sell stops, that it will never make sense to you because that is the liquidity has to be taken out. Some form of liquidity has to be taken out. Somebody has to lose for someone else to win. Okay, that's how smart money operates, technically speaking. And once you understand the operations behind the scenes and the intentions of like, oh, I see what they're trying to do. They like most people see this whole down move as like bearish retail because they're like, oh, well, the tariffs news and this and that, and no, no, that is not. It is the complete opposite of how that works. Okay, the complete opposite. That's it. It is nothing more than this just repeats. If you, I don't know. I see it the same. It's never going to change for me. It will always be the same for what I see it as. Um, all you have to do is just be on board with, there's a difference in narrative and bias. I have a video on it, but you need to be on the right side. If you know what they're reaching for, you'll know where to accumulate at. You can start accumulating whether it's options or futures contracts or stock contract, like whatever you decide to trade, it's still the same. Like if you're an options trader, you know they're about to accumulate under sell stops. You're in a discount. Like yeah, you want to load up contracts in here. You can bear. Yeah, exactly. You have to think normal retail. What retail thinks, and honestly, it's bad. But sometimes even ICT traders get caught up in this too because they see a breakout and they think support and resistance to an extent, and they still get drilled out themselves because they're like it's counterintuitive. Like they're thinking, oh well, like they're three steps ahead but a step behind. It's so confusing because I used to do the same thing when I first traded ICT concepts. It is counterintuitive because you're almost taught to be a contrarian But at the same time, if you're a contrarian when you're in a bullish market, you're going to get ripped apart as an ICT trader because you're going to go try to sell above the buy stops and you're going to get absolutely mutilated, demolished. Like you're going to get crushed like a bug. So it is counterintuitive to an extent, but sometimes you do get price runs like this, and that occurs. Guys, I really didn't. I got how I got really good at this, and I use the language for you guys. It's a language, okay? There's a language that's implemented. ICT done a very good job at creating this language. Once you decipher the language and get behind the scenes, then so that large inverse that happened at 9 o'clock, where here, this. Well, this is the manipulation macro. So what's the manipulation macro doing? Trading lower. So, anyways, I didn't really get good at this until I put in the work. And by putting in the work, I mean like actually deciphering time. Why this time? Why that time? Because this is an X and a Y axis. And so time and price have to align. They do. If time and price don't align on that axis, it's not going to work. Doesn't matter. I'm telling you right now, and I'm like I said, I kudos to ICT and everything he's done. This guy, 30 plus years with this information. I basically, as far as being behind the scenes, I've only had this information for the better part of, or learned this information for the better part of, I would say within the last 8 to 9 months. And I built upon it. And when you build upon it, you start to put you put more of the puzzle together. Okay, there's components to the puzzle that you have to understand. That certain things must occur. You have the low risk buy. You have the the first and second stages of accumulation and distribution and all of the good stuff that ties into a market. The maker models. So when you go back and decipher those on the aspect of time, then it starts to make more sense. And then you have the original consolidations. Why do they go back to original consolidations? Things of that nature. Why do they consolidate? How much time do they spend in consolidation? What occurs ahead of consolidation? So once you understand that and you start to break down everything, then it makes sense. Like this, the algorithm doesn't care. The algorithm knows it has to like come back here. The algorithm doesn't care about anything else in between. It knows it has a function. So that's why he says, as long as you know where it's going, um, as long as you know where it's going, then you don't really have a lot to worry about. So it's easier once you decide where it has to go. I know that they did not go to these highs, and I know they have to go for these highs. It's like that is my draw on liquidity, and draw on liquidity is intentional. So there's times where you want to see whether or not they get to specific highs and lows, and then there's times where you have a draw on liquidity. Draw on liquidity is more intentional. This is my draw. Okay, I took the trade here to go higher here. They didn't go there. So I know all of this is nonsense because I know they still want to reach for this. And they want to get into here. And then once they do that, then you can decipher what's next. Because you have the opening range gap, which is humongous. You have the new week opening gap, which is big. So you have all of this in here as well. But short term, there's this. That's all you need. This is more than enough to get to feed the kids, to make your ends meet, if you want to say. And that's what I would focus on, making your ends meet. It is so hard. And guys, even I have not done this yet. You see all these people buying 5, 6, 7, 8, 9, 10 accounts on a prop firm, for example, and they can't even trade one account. If you can't trade one account, you're not going to trade 10. Yes, it sounds better to pass a account or 10 accounts and then only trade $200 at a time, $200 at a time, and then on that's $2,000 on 10 accounts, right? But you're not thinking about it in terms of if you have a blow up day, you're screwed. You're losing 10 accounts because you don't know yourself, you don't know what you're supposed to, what you're still initially trying to do. It's easy to go make $200 on one account. It's easy to go make $200 on 10 accounts. But if you don't have a plan in place, if you do something outside of what you're supposed to be doing on a day that you didn't make $200 and you lost it, then you lost the account. You're going to blow the account because you don't know what you're looking at. So it's important to understand, even the people that work with me privately, I tell them, hey, if you want to study the information I've given you, don't trade because you're going to get caught up in like wanting to do things that aren't really necessary. So when you're supposed to be studying, you're not supposed to be trading. So when you study and you study the repeating functions, then from there does it get easier for you to identify after about 2 or 3 weeks of studying price action. That's the work you're putting in the work, and honestly you should do it way longer than that. Then you go into a demo account and you trade a demo, and you're like, okay, I want to take this trade for this reason, I want to take that trade for this reason, and I want to identify why this happened. And you should purposely go take losses on a demo account, and that's what I did early on. I didn't show anyone that. I just did that on my own. It wasn't about calling price and getting it wrong. And no, I purposely said, hey, my old self would buy here. I would typically, like, my old self would have sold in here, okay? So I sell here purposely to say, okay, that didn't work out. Why did it not work out? And then you go back in there and you decipher, okay, this is why it didn't work out. This is why it did work out. And then you go take trades that saying, okay, I've done this before, um, so I'm going to do the opposite. I bought undersell stops, for example, in a discount or whatever was happening, and it panned out. So then you start to say, okay, this happened, and then you start putting things together. This high, this low, that low. But that was beyond that was like scratching the surface of ICT content, and like you were the only thing in your way when it comes to ICT, because even with the knowledge I hold, there are still times where I could be a victim of wanting something to happen and it not happening because I wanted it to basically submit to my will. I wanted it to do what I wanted it to do rather than like understanding what was going to happen first. So until you understand that, like there's so much that goes into the process of even like becoming more profitable and becoming more consistent. And until you put in the work, you're not going to get there. You're never going to get there. And it sucks. And some of you won't make it that are even listening to it. All 26 people that are here listening to it, some of you won't make it. And it is what it is. So, point is study. Okay? And study what you do wrong, study what you do right, and I'm you'll be well on your way to becoming likely more successful at this. That's basically all I have. So, any other questions? I'm gonna hop off in about 20 minutes. Um, all right. So let's say they stop short of these highs now. Okay. Let's say they stop short of these highs. Okay. Silver bullet. Where would I want to run at? Well, let's just see how far. If they want to dig into here and then go here, or they want to dig back into this, for example. this fair value gap, then go higher. So if they don't use that to go higher, they're going to trade back in here and then move it higher. So, and then you can grid it. Like you should go study what fair value gaps work, what don't. So let's just say this one, I assume this will like get blown past and, sorry, I'm reading a text. Before going higher. So you want to identify it closing, and we'll see here. I don't expect them to spend a lot of time. What is it? Not it's 9/11 right now. So what can happen is if we get above these, they'll just continue to rocket it higher. Not quote unquote rocket higher. It's after the macro. So if you understand that outside of a macro, it can do whatever it wants to do. So the macro's ended. So it can do whatever it wants to do. Um, so it closed below here. So you're like, huh, why did this not work out? And you go in and you say it didn't work out, didn't pan out. Why? Huh. So outside of a macro price is a free agent. It's a free agent unless you're it's not a free agent. Like it's like the best way to explain it is obviously like outside of a macro is not a key time. Um, but it can continue the bias that it had in a previous macro. So like for here, it can come down in here. This fair value gap, for example, this order block. This is an order block that hasn't been touched yet. And then I would want to see its willingness, and I'm assuming it would get here around 10:30 or so, possibly. If it wants to run higher, it can certainly do that too. But like for example, if I were looking for an entry and I miss this run up, and I know it's 9:13 or sorry 10 New York time 10:13, I would probably wait and see if it had any willingness to get lower first, and then try to take a trade because this is still practically this is still a premium. But at the same time, damage was already done, so I would have expected this to hold. And if it didn't, then I would have come down here and say, okay, maybe it wants a discounted area. Let's see here. Because see all this opening that they left behind? And so they could fill in some more gaps. This big order block. See that big order block on a 15 minute? So if you draw that out, and then you go into your 1 minute chart, for example, yeah. So I don't know. I don't really use. I just use the aspect of time more than the PD arrays. I could really come in here and find a. I don't know. I could find any PD array and make it make sense to you. Somehow, some way. Now we're seeing this being rejected. Okay. If we come below here, get down in here, even come down here, even if it goes, that's the hardest part is understanding like the bias in the macro and then outside of the macro, it can do whatever. Because it still didn't get here. I would expect us to go, like, this is happening. Whether it comes here first, if you didn't get an entry, it's okay. It's not the end of the world. So you have this order block here you could have taken a trade at. Is there any fair value gaps in here? Yeah, you have that right there. And those overlap with each other. So like if you're asking where entries could have occurred at, you're like, yeah, if you miss this and this occurs ahead, you can take your entry here. I would personally be waiting. I mean, it there's so like the entries are last. The entries are the last thing to understand because you have to understand narrative and bias first. And honestly, to kind of trade the way that, ICT trades is you don't really like there's still logic ahead of stuff and you don't really need a bias or narrative. Like you could trade without a narrative or bias and you just trade pure logic. So, mm, point and point though, if you have this run up, like when the damage is done, this is because this is fractal as well, because I'll show you something and I'll show you the fractality of it and how it actually works. So when you have this run right here, and then you get, let's just say this is the damage done, right? You're getting a few pullbacks here and here and here, and then you have run ups in here, and then you have fair value gaps that get left open. That's the same thing happening here. Damage was done. You can't expect them to come back much. It's not going to happen. Like they will come back, and they will come back, but they're going to reach for the objective first and then come back. It's all about what happens ahead. It's a sequence of events. So you're waiting for things to like occur first, or you're identifying what occurs first. So a lot of people just bought right here. They're gonna get stopped out. It's gonna go below these sell stops. That's literally what happens all the time. So it's price registering those prior runs and copying them, but different scales. It's not copying them. It's just logic because ICT said something very specific. There are three things that can occur. And the three things that occur pretty seldom, and you get one of the three things. He said that in one of the most recent videos. I'm not going to share that with you. You can go identify that from his videos, but he told you, where he tells you there are three things that happen. One of the three things occur. If one of those three things occur, it's nothing else, nothing more, nothing less. If one of those three things occur, then you know how to take a trade and where to take a trade. So that's literally it. So if you have this order block, So stop out. Practically, bam, stop out. Okay. Running the stops, accumulating. But yeah, it's imbalance, rebalance, liquidity. And going to an imbalance is not liquidity. So understand that. Going to the imbalance is not liquidity. I'm gonna see if I can find something to show you guys or to have you listen to it. You're welcome. Thanks, spread play. So once you understand this, then the rest comes easy. Okay. So same with this. Well, why didn't that work? Why did we use it in inversely and then go lower? That doesn't make sense. And then why do we come down here? And are we utilizing, whatever that may look like? And if you want to see something, so anyways, that's now I try to draw this up for you guys. I try to put the PD arrays on the chart for you guys, but if I'm being completely honest, all I'm watching for is liquidity. And liquidity is my full, like, liquidity is what I study the most. That's all I look at primarily. Inefficiencies, I see them. I know that this is inefficient. I don't need to put this on my chart. I know that price is not traded to this. I know price is not traded there. I know price is not traded there. Does it have to? No, it doesn't technically have to. All it's seeking to do, this gets people short. Now, I use the PD arrays to help you guys out. Do I need them? No, I don't. I don't use them hardly. I put them on the chart for you. Is there volume balance tied to this? Yes, there is. So, we're going to see the does it want to get above? Because technically, if you want a PD array to be respected, you don't want it to go into the upper half. And if it closes back above, you don't want to see it back into the lower half. Well, why not this PD array? Why this one? Well, it's very specific. So, point is, can this become reclaimed? Yes, it can. We just used it to go lower. Can we use it to go higher? Yes. There's so much in your charts that, like, I see, obviously, but it's not. This is why I don't use PD arrays, because I see all of this without having to put it all on my chart. It's not necessary for me to understand what's happening. I don't need to put all of this on my chart. It just clutters. It's a lot of lipstick. It's literally that's all. So if the narrative starts here in a macro and we close below sell stops and we were like, oh, okay, smart money is going to accumulate. Yes. So what do we expect in between a macro? Well, typically it's going to continue the bias at which it traded at into the next, even the next macro. So it can expand here and into the macro, it can expand even higher. So why does it not need to go here? Why does it not need to go here? Eventually it can, because these are imbalances that need to be filled out. You have this self-stop liquidity here. So what happens ahead of that? That's the most important part. It's all you have to do is check to see what happened recently. So, guys, I'm going to be here for a few more minutes. I got to leave in about I have golf today, so I have to leave in the next 20-30 minutes. But point is, what works, what doesn't work? How do you know it's going to work? How do you know it's not going to work? How do you know if I'm just going to continue to build up stuff here and do this and then so yeah, if you know what happens in the macro, you know that they're going to retrace. Eventually, macro's not going to continue in the same direction because the macro has to end. The function ends, but it's still continuous. Still no close back above this, but we know it just used this as rejection. We have this here, and if we wanted it to pan out, it's about to be 9:30 or 10:30. Sorry. Typically not 10:30. This is the silver bullet hour, by the way. So if we take this to here, so there's your silver bullet hour, right? Okay. Then you're studying what happens here. Close above the midpoint. Great. Fantastic. Trades back to it again. Does it create equal lows in here to go run lower into the order block? Like, there's a lot to study, obviously. Does it have to get down here? No, because this has already kind of did what I wanted it to do, and it closed above this. It's very bullish when it closes, gets to a fair value gap and closes above. No bodies into it. So I'm expecting these to go ahead and get ran. It's what I'd be looking for. But need time to align for PD array respect. Yeah. It's 10:30 now. Anyways, guys, so I'm about to hop off of here. Hopefully you got some insight. Study. Lots to study. It's great stuff. I hate I try to convey the message that ICT does through these PD arrays, but I don't really do the best job at it. It takes some time for me to obviously get accustomed to as well to not be so direct. At the end of the day, it's liquidity and inefficiencies. That's all the market does, trades back to. So, guys, it's been fun. I'm gonna hop off of here. If you guys have any questions, leave them in the comments. I'll try to address them in the public Telegram, and from there we'll go from there. I want to see if this runs. I'll take a few more minutes here. I like this to just finish the job here, blow out everyone that was trying to short in here. I remember days where I used to get stopped on stuff like this, and it would just irritate the piss out of me. And now I don't really fall victim to these things. You can see where the manipulation is going to occur to. You can see where they're going to accumulate at and distribute to. So,